everybody. Welcome to our third and final session on GST. In the previous session, we have learned about supply under GST. We have seen how to determine time of supply and value of supply. We have also seen invoicing under GST and input credit under GST. Let us see the topics we are going to cover in this session. We will discuss on the return compliance, its components and process. We'll discuss on the due date and modes of payment of tax under GST. We will see the consequences of non-compliance under GST. We'll see accounts and other records under GST and the provisions relating to transition to GST. Let us now see the returns to be filed by a regular dealer. The first return to be filed by a regular dealer is Form GSTR1 to be filed on monthly basis. The due date is 10th of the succeeding month and it contains details of outward taxable supplies. Form GSTR2A is an auto-populated form made available on 11th of the succeeding month. It contains details of inward supplies based on GSTR1 filed by the dealer's suppliers. Form GSTR2 is to be filed by a regular dealer on 15th of the succeeding month. Any additions or modifications in Form GSTR2A must be submitted in Form GSTR2. On 17th of the succeeding month, Form GSTR1A is made available to all suppliers containing details of outward supplies added, corrected or deleted by recipients in their Form GSTR2. Form GSTR3 is the monthly return. The due date is 20th of the succeeding month. It will contain the final details of outward supplies and inward supplies, and it has to be furnished along with payment of the amount of tax for the month. Form GSTR9 is the annual return. The due date is 31st December of the next financial year. In it, the details of ITC availed and GST paid, including local, interstate and import-export transactions, is to be furnished. Now that we have understood the returns to be filed by a regular dealer, let us see an illustration to understand this. Assume that you are Supercars Limited, a regular dealer. Ratna Steels is your supplier. Ratna Steels issues a tax invoice number 6 to you for a supply made to you. We'll now see how the invoice will appear in your books for the month of April. In the inward supplies register, invoice number 6 is recorded. The same invoice gets recorded in Ratna Steel's outward supplies register. Similarly, Ratna Steels issues invoice number 7 to you, which gets recorded in your inward supplies register and Ratna Steel's outward supplies register. Again, Ratna Steels issues invoice number 8 to you, which gets recorded in your inward supplies register and Ratna Steel's outward supplies register. Ratna Steels now issues invoice number 10 to you, which also gets recorded in your inward supplies register and Ratna Steel's outward supplies register. Rev Automobiles is your customer. Now, you issue an invoice number 1 to Rev Automobiles for an outward supply made to them. It gets recorded in your outward supplies register and will simultaneously be recorded in Rev Automobiles inward supplies register. Similarly, you issue invoice number 2 to Rev Automobiles, which gets recorded in your outward supplies register. Next, you issue invoice number 3 to Rev Automobiles, which also gets recorded in your outward supplies register. Again, you issue invoice number 4 to Rev Automobiles, which also gets recorded in your outward supplies register. Let us now see what will happen on May 10th. Ratna Steels will upload GSTR1, which contains details of outward supplies made by them in the month of April. Similarly, you will also upload your GSTR1, which contains details of outward supplies made by you in the month of April. GSTN stands for Goods and Services Tax Network. It is a not-for-profit organization which will build the technology infrastructure for GST, for the activities of return filing, payment of tax, registration, etc. The millions of returns to be filed by all the dealers in India will be stored in this portal. Each of the dealers will have their own login to the portal. Here, in this illustration, we will focus on Ratna Steels and your login to understand the return filing process. GSP stands for GST Suvidha Provider. They are third-party applications which will have the sole authority to directly interact with GSTN. On account of the huge data of all indirect taxpayers of the country, this also being highly sensitive and private information, GSPs are carefully selected third-party applications which will have the sole authority to directly interact with GSTN. There are 34 third-party applications that have been selected to become GSPs. On May 10th, Ratna Steel's GSTR1 will get uploaded to GSTN in Ratna Steel's portal via a GSP. Similarly, your GSTR1 will also get uploaded to GSTN in your portal via a GSP. These two GSTR1 returns will be uploaded in GSTN. Let us now see what will happen on May 11th. GSTR2A containing details of inward supplies which have been accumulated based on outward supplies filed by all suppliers will be made available to all the dealers. Your GSTR2A will be made available to you. You will now match your inward supplies register with GSTR2A. Invoice number 10 is found to be matching. Invoice number 8 also. Invoice number 7 also. Invoice number 6 is missing. It has been missed out by Ratna Steels in their GSTR 1. You will note invoice number 6 which has to be added. On May 15th, you will file GSTR 2 containing the missed out invoice number 6. The GSTR 2 will be uploaded to GSTN via a GSP. On the basis of GSTR 2 filed by you, provisional ITC of Rs 40,500 will be made available to you. On May 16th, based on GSTR 2 filed by you, GSTR 1A of Ratna Steels will be prepared containing the addition of invoice number 6. This will be made available to Ratna Steels. Ratna Steels will now cross-verify their outward supplies register to find the missing invoice. Incidentally, they find that invoice number 6 has not been uploaded while filing GSTR 1. They will accept this invoice and file Form GSTR 1A by 20th of the month. On May 20th, Form GSTR 3, which is the monthly return containing final details of inward and outward supplies, will be made available to all dealers. Ratna Steels will get its Form GSTR 3 and you will get your Form GSTR 3. Ratna Steels and you will verify the details of Form GSTR 3, and along with payment of the tax due, you will upload your GSTR 3 in GSTN via the GSP. On May 21st, a report of the eligible ITC for the month will be made available to all the dealers in Form ITC 1. You will get your Form ITC 1 showing the eligible ITC to be Rs 40,500. You will verify this ITC with your inward supplies register. You find that the eligible ITC is correct and all the inward supplies have been considered. This is the entire return filing process which every indirect tax dealer will need to comply to every month. The important dates for return filing in a month are the 10th, 15th and 20th. On 10th, outward supplies of the previous month need to be uploaded. On 15th, confirmation of inward supplies along with any modifications and additions need to be provided. And on 20th, GSTR 3, which is the monthly return containing the final details of outward and inward supplies of the month, should be uploaded along with payment of the tax due. Also, there are two important points that will determine a dealer's eligible ITC for a month. First, the dealer's inward supply will be matched with his supplier's outward supply, and only if the transactions are found to be matching, the dealer can avail input tax credit. Second, the dealer's supplier has to file his return and pay the tax due for the month for the dealer to be eligible to avail the input tax credit. We have just seen the return filing process and learned that on 20th of every month, tax due has to be paid to the government. How can this tax due be paid to the government? It is mandatory to do an e-payment if the tax payment is more than Rs 10,000. For e-payment or online payment, Modes available are internet banking, credit or debit card, NEFT, RTGS and IMPS. For offline payment, where amount is less than or equal to Rs 10,000, payment can be done via cash, check, DD, etc. Non-compliance to the GST law is treated seriously with varying degrees of punishment ranging from late fees to even imprisonment. Let us now see what these consequences of non-compliance are and when they will be applicable. A consequence of non-compliance is late fee. It will be applied when a dealer fails to furnish his returns. For monthly or quarterly return not filed, 100 rupees per day will be charged till the date the return is filed, subject to a maximum of rupees 5,000. For annual return not filed, 100 rupees per day will be charged to a maximum of 0.25% of the dealer's aggregate turnover. Interest is another consequence of non-compliance. For delay in tax payment, 18% interest will be charged. For undue or excess claim of input tax credit or excess reduction of output tax liability, 24% interest will be charged. Cancellation of registration is the next consequence of non-compliance. If a regular dealer has not furnished his tax returns for 6 consecutive months, his registration will be cancelled. If a composition dealer has not furnished his tax returns for 3 tax periods, that is 3 quarters, his registration will be cancelled. Fines are another consequence of non-compliance. They are applicable in cases of tax evasion. Fine of 10,000 rupees or an equal amount equal to the extent of tax evasion will be levied. Fine will be levied with imprisonment up to 5 years depending on the amount of tax evasion, with slab ranging from rupees 100 lakhs to 500 lakhs. We'll now learn the guidelines on maintaining accounts and other records under GST. A registered person should maintain accounts of the following at the principal place of business: accounts of production or manufacture of goods, of inward and outward supply of goods or services, stock of goods, input tax credit availed, and output tax payable and paid. If more than one place of business is specified in the certificate of registration, accounts relating to each place of business should be kept at the respective places. Persons whose turnover exceeds rupees 2 crores should get accounts audited by a chartered accountant or a cost accountant. For how much time must accounts of a financial year be retained under GST? Every registered person should retain accounts till the end of 72 months from the last date of filing of annual return for the respective year. Let us understand this with an example. Books of financial year 2017 to 18. The annual return for this year must be submitted by December 2018. So the books for this year must be kept till the end of December 2024, which is 72 months. Let us now move to an important component of GST, that is, transition from the current tax regime to GST. On transition from the current tax regime to GST, the foremost concern in the minds of existing dealers is whether they can take input tax credit on the closing stock on the day of transition and whether their existing input credit will be carried forward. Let us learn about the provisions that have been laid down for transition to GST. The first provision states that the amount of SENVAT or VAT credit appearing in the last return filed before transition to GST can be carried forward as input credit under GST. This is subject to fulfilling of two conditions. Let us now see these two conditions. The first condition is that the input credit should be available in the last return filed. Let us look at the Form ER1 and VAT Form 100 shown here. How much credit is available in Form ER1? It is rupees 30,000. In VAT Form 100, input credit of rupees 12,000 is available. So SENVAT credit of rupees 30,000 and VAT credit of rupees 12,000. This balance can be claimed as input credit under GST. The next condition is that the credit should be allowed under GST. For example, a taxable stock item under the current regime is made exempt under GST. In this case, input tax credit on the taxable stock item cannot be claimed on transition to GST. Now, you all might be curious about which tax head under GST will this input credit be carried forward to. Is it going to be CGST, SGST or IGST? ITC on all central levied taxes will be carried forward as CGST credit. ITC on all state levied taxes will be carried forward as SGST credit, and ITC of CVD, SAD, etc. will be carried forward as IGST credit. Here, VAT credit of rupees 12,000 will be carried forward as SGST credit, and SENVAT credit of rupees 30,000 will be carried forward as CGST credit. Let us now see the transition provisions related to unavailed SENVAT credit and VAT credit on capital goods. Currently, under central excise, SENVAT credit should be availed to the extent of 50% in the current year, and the remaining should be availed in the subsequent year. Similarly, in the case of VAT credit on capital goods, in some states it can be availed in the first instance itself, and in some states the credit has to be availed in installments. What happens to the SENVAT and VAT credit on capital goods that was unavailed? Can that be carried forward to GST? They can be carried forward subject to the following conditions. Under the current statute, SENVAT and VAT credit on the capital goods should be allowed. It should be admissible as input tax credit under GST. Let us now see the provisions with respect to tax paid on inputs in stock on the day of transition to GST. Can input tax credit be claimed on them? On the day of transition to GST, there will broadly be 4 types of businesses. A registered taxable person who was not liable to be registered under the earlier law. For example, a manufacturing unit with turnover less than rupees 1.5 crores is not currently required to be registered under excise. However, under GST, many of such units will be required to register. Can they claim input credit of the tax paid by them on inputs in stock? A person who was engaged in the manufacture or sale of exempted goods. Now, these goods have become taxable. Can the person claim input credit on the inputs in stock? Provision of exempted services which have now become taxable under GST. First stage dealer or a second stage dealer or a registered importer. Can input credit on closing stock be availed by these businesses? Yes, input tax credit can be availed by all these businesses subject to laid down conditions. We'll now see the conditions for availing ITC on closing stock. The closing stock must be used or intended to be used for taxable supplies and not exempt supplies. In the current tax regime, tax on which ITC is not allowed is added as product cost. On transition to GST, ITC will be seamlessly allowed across the supply chain, and this should naturally result in reduction of the base cost and subsequently reduced final price to the consumer. For this, there is an anti-profiteering clause in the GST law which states that any reduction in cost by way of availability of input credit on transition to GST must be passed on to the end consumer in the form of reduced prices. To be eligible for input tax credit under GST, you must be a regular dealer. If you are a composition taxpayer, you cannot avail input tax credit. You should have a tax invoice or debit note or credit note as a document in respect of the closing stock. The tax paying documents that you possess must be dated within 12 months from the date of transition. Hence, stock for which documents are dated earlier than 1 year before the date of transition to GST will not be allowed for claiming input tax credit. A service provider must not be eligible for abatement in the current regime. As abatement will not exist under GST and the service will be fully taxable, input tax credit will not be allowed on any inputs on which abatement has been claimed. When dealers in the supply chain purchase goods directly from the manufacturer or first stage dealer or second stage dealer, the excise charged on the item is shown clearly in the invoice. Whereas when a dealer purchases from a wholesaler, the excise component will not be shown on the invoice because the wholesalers pass on the excise duty as cost. In this respect, certain conditions have been laid down for claiming input tax credit of excise duty paid on closing stock. You can claim 100% of the input tax credit of excise on closing stock if you have the invoices or any other tax paying documents showing the excise duty paid for the closing stock. You can claim 60 or 40% of the input tax credit of excise on the closing stock if you do not have invoices or any other tax paying document showing the excise paid on the closing stock. For this, if the goods fall in the 18% and 28% tax rate slab, 60% of the CGST collected on the supply of these goods can be claimed as input tax credit. If the same goods are supplied interstate, 30% of the IGST collected on the supply can be claimed as input tax credit. If the goods fall in the 5% and 12% tax rate slab, then 40% of the CGST collected on the supply of these goods can be claimed as ITC. If the goods are supplied interstate, then 20% of the IGST collected on the supply of these goods can be claimed as ITC. We'll understand this with an example. Say that a dealer has a purchase voucher as shown here, where the cost is 10,000, excise duty at 12.5% has been levied on the cost plus excise duty of 1,250, totaling 11,250. VAT at 5% has been levied. Assume that in this voucher, this excise duty has been shown clearly. In this case, the dealer can claim the full input tax credit of 1,250. Say that in the purchase voucher, this excise duty has not been shown. In that case, if the goods are supplied within the state, and let us assume that the dealer supplies the goods at the same price of 10,000 and CGST at 9% and SGST at 9% is levied. So here these goods are attracting 18% tax rate. Hence, the dealer can only claim 60% of the CGST collected on the supply of these goods. So CGST collected is rupees 900. 60% of the CGST collected is rupees 540. In this case, though the dealer has paid rupees 1250 as excise duty, he can only claim rupees 540 as input tax credit on the closing stock. Let us say that the same goods are sold outside the state. In that case, assuming the same price of 10,000, IGST at 18% is being collected. Here, 30% of the IGST collected is claimable as ITC on these goods. So IGST collected is rupees 1800. 30% of the IGST collected is rupees 540. So rupees 540 can be claimed by the dealer as input tax credit of excise on the closing stock. This brings us to the end of our sessions on GST. In this session, we have covered the return process under GST, how to pay tax under GST, consequences of non-compliance, and transition provisions. We hope that you have been able to have an overall understanding of the fundamentals of GST and compliance under the GST law. To learn more on GST, you can always refer our blog, blogs.tallisolutions.com, or download our app Tally for GST. Thank you.